Hi everyone, welcome to episode 5 of Avoiding the Biggest Investment Mistakes. And today I'm going to discuss why making emotional investment decisions is a big mistake. Some people, they see the stock market as an extension of human emotion. So that's why when we see ups and downs in the market, it really triggers emotions that drive investors to either buy or sell investments, and usually at the wrong time. Essentially, we're biologically wired to gravitate towards things that make us feel good and, pull away or run away from things that make us feel bad. And it's fear and it's greed that are often the root causes of our emotional financial decisions. Our fear, it causes us to abandon an investment strategy, maybe when it's not doing as well as we thought, or, fear causes us to take too conservative of an investment approach. And greed, on the other hand, causes us to chase investment fads, and it causes us to also take on too much risks. The best example of this is the 2008 financial crisis. Crushed millions of investors' portfolios, and what happened? Well, investors panicked and they sold near the bottom. Their fear kicked in. Since then, the markets have rallied and investors are still afraid to buy back in. They're keeping their money on the sidelines, and that's a big mistake. No two charts better illustrate the importance of staying invested than the ones you're about to see on the screen. The chart on the left shows us the massive difference in returns for investors that held on to their investments for 1, 5, 20-year time frames, and it really shows us how the power of compounding can dramatically impact your returns. The chart on the right, it shows us the gain required to fully recover from a loss. We saw in 2008 that we had losses intra-year about 50+%. So what does that mean? It means that we would need a gain of about 100+% just to get back to even. So the bottom line is that when markets swing, it's important to stay invested in order to really capture the returns of a market rally. So whether it's fear, whether it's greed, do your best to leave your emotion at the door, because ultimately, your retirement depends on it. But I want to hear what you have to say. Have you ever made an emotional and financial decision when it came to your investments? Let us know in the comments below. And in our next video, I'm going to discuss another big investment mistake: failing to diversify your investments. And if you like this video, please subscribe to our channel so that you can receive more investing tips just like this. Thank you for watching.